Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Live. Hello, traders, and welcome to a new episode of Chat and Chart. Hope you had a great weekend. And like the market open was quite something. We'll go to that. We'll get to that once we finish the economic calendar. So let's go through the economic calendar day by day and see what we have this week. Some of you might know that last week the US government was in shutdown because of the shutdown. Some data points were delayed, mainly talking about the jobs reports, the NFP, the unemployment, the whole thing. So we're expecting to see the release of those this week. Okay, so let's get to it. Let's start talking about the economic calendar. Let's go through the economic calendar. Let me open the chat and make sure that packed week ahead. Yes. Hello, Meza. Hello, everyone. All right, so let's get to it. On Monday, we don't have anything, so we start with Tuesday. On Tuesday, we have retail sales and core retail sales, both coming from the US around 5:30 p.m. Dubai time. So the previous reading was 0.6%. The forecast is 0.4%, so like a decrease in retail sales, which shows less confidence in the US economy, and the core as well. It was 0.5%. The forecast was 0.4%. So yeah, they're expected to be lower than the previous, although these numbers are for December, and December is known for being a good month for retail sales because, you know, holiday season and people start spending and buy gifts, and you know, so having a lower than the previous would mean like very bad indication for the economy. But that's just a forecast. The actual might come at 0.7%. Who knows? So we will have to wait and see. If it comes in higher, that's positive for the US dollar. If it comes in lower, it shows less confidence in the economy. So we will see negativity on the dollar. And naturally, positivity on everything else. So if the dollar becomes negative, everything else becomes positive, and vice versa. Meza, I made good progress in my Bitcoin due to your analysis last week. I want to thank you. You're welcome. You're welcome. I'm happy. I'm glad that you're doing well, and hopefully you'll do even better this week after we finish analysis. Okay, so now we move to Wednesday. On Wednesday, we have an all-day holiday in Japan because of the National Founding Day. And then we have the average hourly earnings, the non-farm payroll, and the unemployment rate all getting released at the same time. Those were supposed to come out on Friday, but because of the government shutdown, they didn't. They were pulled from the economic calendar. So let's see how those turn out to be. But as for the average hourly earnings, no change is expected. And non-farm payroll is expected to be higher than the previous, and the unemployment rate is expected to stay unchanged at 4.4%. Now, let me tell you what happens if the actual comes higher or lower. So if the average hourly earnings comes higher, that's positive for the jobs market. If the non-farm payroll comes at 70 or more, that's positive for the jobs market. And if the unemployment rate comes at 4.4% or less, that shows resilience in the labor market, which is a good thing for the US dollar, meaning that they don't need to cut rates to boost the jobs market. Okay, So next we have the crude oil inventories, and the previous was minus 3.455 million barrels. No forecast number yet, but if it comes in as a shortage, we will see more bullishness on the oil prices. If it comes in at a surplus, so in the plus, it means that supply is outpacing demand, so prices go lower. And next we have the 10-year note auction. The last reading was 4.173%. The forecast, no forecast number yet. If the actual comes in higher, or what are we expecting? I'm expecting it to stay around the same area, which is 4.175%, or like give or take 0.002%. Okay, so that's for Wednesday. So the most important numbers on Wednesday are actually the jobs reports, average hourly earnings, non-farm payrolls, and the unemployment rate. Then on Thursday we have three numbers coming, or it's basically the same number, which is the GDP coming from the UK. We have the yearly number, the monthly, and the quarterly number. Now, the yearly number, the previous was 1.3%, no forecast number yet. If the actual comes in higher, it means that the GDP or the economy is expanding or is growing in the UK. And now the monthly is expected to be lower for the month of December. So we'll have to wait and see. If it comes in higher than this, this could be positive for the GBP. And the quarterly, and vice versa, of course. If it comes in lower, it means negative for the GBP. Now, the quarterly number is expected to come at 0.2% in comparison with 0.1% previous. So it's expected to be higher or better than the previous, means that the UK economy has grown on a quarterly basis, okay, which is positive for the GBP. But if it comes in lower, that's negative for the GBP, and we will see more bearishness on the GBP. All right, now we move to the numbers coming from the US. We have the initial jobless claims, which came in somehow bad last week. It came in at 231,000 jobless claims. The forecast is a cooling in this number to 222,000 jobless claims. Now we'll have to wait and see. If it comes in lower, that's positive for the jobs market. If it comes in higher, that's negative for the jobs market. So you need to pay attention to those numbers, because last week we had three different data points about or like on the jobs market, or the labor market, and all three of them came negative. And add to that the jobs report from Friday got pulled from the economic calendar because of the government shutdown. So last week was not a very good week for the jobs market. So let's see if this week it can become better than last week. Now, next we have the existing home sales. The previous was 4.35 million. The forecast is a decrease to 4.22 million. That's not a very big decrease, but it's still a decrease, and it shows slowing in the economy, because like if the economy is hot and it's moving, we would see like home sales, or like you would see homes exchanging between people more than this. So if it comes in higher, it shows strength and resilience in the American real estate market. If not, then it shows negativity and lack of confidence in the economy as a whole, or the real estate, at least real estate sector. Then we have the 30-year bond auction. The previous reading was at 4.825%. Good morning to you too. Good morning. Good morning. Inshallah, Meza. All right. So we have the 30-year bond auction. The previous was 4.825%, because like we don't have any expectations of lowering rates, or like cutting rates, or even changing rates at all by the Fed. We might see the numbers coming very close to this. Now, let's wait and see. Let's wait and see. I don't want to like just give out the theory since we don't have a forecast number anyway. Then on Friday, finally, we have the CPI numbers coming from the US. We have the monthly CPI, the yearly CPI, and the core monthly CPI. Now, the previous reading for the monthly CPI was 0.3%. The forecast is no change. If it comes in higher, it means that inflation is picking up. Next, we have the CPI, yearly CPI. The previous was 2.7%. The forecast is a drop to 2.5%. Okay, so that's rate cut friendly. If the inflation is going down, then it means they can cut rates and control the inflation. So because like at those levels of interest rates, inflation is still going down at a regular pace, which is healthy. So if it comes in at 2.5%, that would be very negative for the US dollar. But if it comes in, for example, at 2.6, 2.7%, or even higher, that's negative for, that's very positive, sorry, for the USD, because it means that they will need to keep rates higher for longer. And like the hopes of a rate cut would become lower and lower. Then we have the core CPI, which is excluding food and energy. Same reading, but excluding food and energy. The previous was 0.2%. The forecast is 0.3%, so an increase. So let's wait and see how those numbers, all those numbers, would work together, because they're all for the month of January. They're as of January. So if the core CPI is increasing and the CPI, the monthly CPI, is expected to stay the same, so we'll need to see how the yearly CPI would actually go down in comparison to last year, January. Okay, so that's it for the monthly calendar or the weekly calendar. Do you guys have any questions before we move to the charts? This time, I'm excited to move the charts. Okay. USD 30-year bond auction, how much the effect can imagine? Not much. Like it does not affect the markets that we usually trade as retail traders, but it affects the bond market. Obviously, it affects the value of bonds and the yields in general. So yeah. One more question about home sales. As Grant Cardone doing some sales and merging Bitcoin with real estate, how can we see it in macroeconomics? I don't get the question. What do you mean? Like, can you rephrase your question so that I can understand it better? Okay. Can you please explain again how the CPI numbers affect interest rates? Sure. Now, CPI, what is CPI number? What is the CPI? It's the consumer price index. So if that's high, it means that's an indication that inflation is high. So interest rates are a tool that the central banks use to control interest rates, to control inflation, sorry. So if you want lower inflation, what do? You increase interest rates, you hike interest rates, so that the circulation of money and the supply of money in the economy becomes less. So what happens when something becomes less? Like, for example, if the supply of something becomes less than before, the value of it increases, right? So the purchasing power becomes higher. That's how you fight inflation. Inflation is basically the erosion of purchasing power. So your dollar today will not buy you the same things tomorrow. So that's inflation. Like you will need to pay more for the same thing that you used to buy last year. So that's inflation. That's the decreasing in purchasing power. So when they increase interest rates, what happens? People keep their money in their banks to get returns on that, on their deposits. That's one side. The other side becomes that cost of borrowing money from the banks becomes more expensive. So people stop doing it. Okay. So when they stop doing it, what happens to the money supply in the economy? Becomes less. So what happens to inflation? It goes down, it cools. Okay, so that's how they are both related. I hope I answered your question. Um, the impact on US dollar and Bitcoin price hikes. Maze, I'm not sure I understand your question. Can you please, like, is it like related to the first question? The impact on US dollar and Bitcoin price hikes? I'm not getting it. I'm sorry. You are most welcome. All right. Mesa, you can reach out to me personally, and I'll explain it to you. Now let's move to the charts and see what we have this week. Um, let me share my screen. Just give me a second, please. Go to the weekly. Okay. We stop the share and we start a new one. All right. There it is. Which one is most important, CPI or NFP? NFP is more volatile since markets anticipate it more eagerly. You see higher volatility and higher on the short term, NFP is like more important. On the longer term, CPI is more important. I don't know if that. Can I reach out on Instagram? Sure, you can do that. So yeah, on the long term, CPI like measures inflation. So inflation is not like a daily thing. But what you actually asked is a great question, because CPI represents prices and inflation, while NFP represents the jobs market. So what is the dual mandate of the Fed? Is to keep prices stable, so price stability, and maximum employment. So those two are like, you can say that they're both equally important. Okay, because both of them represent the dual mandate of the Federal Reserve. All right, so now it's time to move to the charts. If you have questions, guys, just keep them coming. I'll stop and answer the question, then go back to the charts. Now we start, as always, with the DXY, the dollar index. Okay, so we saw it break this low, which is the lowest price since 2022. So that's like the lowest price in 4 years. And then we got rejected from it. If we zoom out, we can see that this is the major trend line. So it makes sense that it got rejected from here. We had like the previous week, not the previous week, the one before, we had a strong rejection. And then last week we closed bullish. Now I'm expecting to see more like upside based on the weekly chart alone. Now let's move to lower time frames. We go to the daily. Okay, so on the daily, we can see that now we're facing an obstacle to the upside, which is this speed line. Okay, we had first this one, we broke it, then we continued going down based on this one, we based on the slope of this one, then we broke it, and we started going down based on the slope of this one. This one, like this last speed line, is the last what's it called? It's the last confirmation, or it's the last safety net for DXY before like going higher. If it breaks it and closes above and starts trending higher, then the whole trend, this trend that has been going on for a year now, is reversed. Okay, so let's wait and see. But so far, it's still respecting this trend line. We might break above and start building like higher highs and higher lows and building like bullish structure, then and only then we can start thinking about the DXY as going up. But it's good to have it like in the back of our heads that it got rejected from a very important trend line, the major trend line that has been intact for the past 17, 18 years. I don't know. Yeah, almost 18 years. So yeah, let me check. How long has it been intact? Yeah, 2008, so 18 years. Um, like that's no child's play. It's an important level. We need to keep that in the back of our heads because we might need to react very soon on this, maybe within February. So just keep an eye on it. But so far, we don't trade what we feel; we trade what we see. So far, we see that it's still going down, so we'll trade accordingly. But we will keep like we will stay cautious trading the DXY and anything against the DXY, which is basically everything. Okay, the 4 hours starting to make like bullish structure. Let me see, is it like respecting this? No, it broke it. Like I'll need to wait and see the breaking of 99.5 and closing above. That's why I have my alert here. Once it breaks above this and closes above, it means that we might be in for a reversal, a major reversal. Okay. Now finished with the DXY. Let's now move to the euro, which is the exact opposite. Okay. So don't mind this. I was just like, while I was like analyzing in the weekend, I saw that this could be a good trade. Anyway, so the exact opposite. We saw not the previous week, the week before, we saw a strong rejection from this level, and last week closed bearish. Now I'm expecting it at least to go to the 1.17 area, maybe even 1.16 area. But overall, we might be in for a drop and we might have a top here. It's the exact opposite of the XY, so this might be a top, as that might have been a bottom. So we need to keep that in mind. That's what the weekly chart is showing us. On the daily, however, you can see that higher highs, higher lows, it's still trending up, and it's above most of the major, it's above all the major moving averages. So we still have this obstacle, but I wouldn't dare to buy, to be honest, because it might just reverse any minute now. Okay, because of the same reasons. Yeah, but like, if someone held a gun to my head and it was like, what would you do? Would you buy or sell euro? And on the like lower time frame, I would buy. On the like higher time frame, I would sell. Okay, makes sense. Okay, like you mean CPI has long-term effect on markets and FP has short-term? Yeah, somehow, but I'm talking not in terms of effect. I'm talking in terms of volatility. Okay, so CPI would cause like long-lived volatility, while the NFP would cause like strong volatility short term, but it might sometimes it does reverse trends. Okay. Do you think the high of gold is locked in? If you look at monthly, it is too extended, needs retracement. Well, we got $1,200 retracement. I don't know if why would you need more than that? That's a very big retracement. But however, I like we might see more downside on gold. We'll talk about it when we reach the gold chart. But for now, yeah, um, yeah, I think for now the top is locked in. Let's see if it will continue going up, because guys, I don't know if you've heard about this, but China is still buying gold. Like the central bank of China is still buying gold for the 15th consecutive month. So they've been buying gold monthly, on a monthly basis. They like accumulated more than 40,000 ounces of gold, like over the past 15 months. So, like, I'm not sure if this would mean more going up on gold, because like the demand is high, central banks are buying. Um, but for me, I wouldn't take that as a buy signal. I would wait for my charts to confirm that move. Okay. All right. So the euro, short term, I would buy. Long term, I would sell. Makes sense. Now it's time to move to GBP. Now look how sad this is. Like, I wanted to buy here, it reached here, and then got rejected. But that's fine. It happens. Um, we still might go down to this area, by the way. So I will not change anything. Uh-huh. We'll start with the weekly. Okay, so on the weekly, it closed bearish last week, and we saw the same rejection because of the XY. We might reach here, then continue going up, but that's under the case if DXY continues going down. But if it reverses to the upside, this trade will hit stop loss. Okay. Hello, Winona. Correct, Meza. Yes, China wants gold as a new currency rather than relying on the US dollar, because like now US dollar has been the reserve currency for many countries for the past, I don't know, like 50 years, 60 years. Um, Now, like, things are changing, because like they don't want like to be controlled by the US, like especially countries like China, the BRICS thing. So like the countries who are not on good terms with the US, and they're always in economic uh, fights with the US. So yeah, makes sense. Hello, farming. Hello, hello. Okay, so back to the charts. So yeah, I was telling you, if the DXY breaks or like reverses to the upside, this trade will hit stop loss, and we will see the GBP go down. But if it does not, and it respects the trend line, we might see the GBP go up more and more. Okay, so on the daily, nothing here. On the week and on the 4 hours, they're all still like all of them. Again, I like to repeat this quote, which is, we trade what we see, not what we feel. Okay, we're feeling that a reversal is approaching, but what's the smart thing to do is to trade based on what we have in front of us. In front of us is an uptrend. We're still seeing bullishness, so it does not make sense to start selling just because we feel that a top is formed. Okay. Okay. All right. So this is done. By the way, guys, have you seen the Dow Jones? Dow Jones made a new all-time high above and closed above 50 for the very first time ever. So it made history. Like, we're living in special times. The Dow Jones closed above 50,000 points for the very first time ever. Okay. So that's very bullish. That's very, very bullish. Let's look at the daily. Okay, so although like the Dow Jones is making all-time highs, look at what the Nasdaq is doing. Look what happened here. So what happened is the following: people like went out of the Nasdaq and moved their money from Nasdaq to like the tech companies into growth names and like industrial names and like the kind of companies under the Dow Jones. So that's why we saw like this drop in Nasdaq. This is what we call rotation. So they're rotating their money from Nasdaq to Dow Jones. So we saw Dow Jones break all-time highs and close above 50,000 for the very first time, while we saw a big drop in Nasdaq. Okay, so that's basically it. That's the reason. Now I think it's time to go to gold. Now let's start with the monthly. Like, even though we had a strong correction last month, like the last 2 days of the month, it still managed to close bullish. And we had this strong correction to 4,400 at the beginning of the this month, but it got rejected, and now it's still showing strength or bullishness. Now the weekly closed like the past week, not the past week, like the week before, it closed very bearish, which is like the exact opposite of how the DXY looks like. That's when like it all started when Trump nominated Kevin Warsh as the like new Fed chair after Jerome Powell. Okay, so this caused like the dollar to go up, everything else to go down. So that's what this week is about. Now we went down, we retested an important level or like a moving average, and then we got rejected from it. But we closed inside the band, so this might mean like another correction to the downside, but that's not a guarantee. Let's see lower time frames and see if we have any any more intel on this. So yeah, that's a trend line. We got rejected from the trend line and the moving average, which coincided with the 50-day moving average. That's an important level. We saw a bullish engulfing here, and then a continuation to the upside. Then we saw a rejection and a correction late Thursday and early Friday. Then we saw a rejection, and now we're one step away from breaking above and making a new all-time high, which is breaking above the 5,100 level. Why? Because let me show you on lower time frames to look clearer than this. So we've been making lower highs, lower lows, lower highs, lower lows, right? During this like during this correction, we've been making lower highs, lower lows, under this trend line. Now we broke above this trend line, okay, and look, this low should have broken here if it wants to continue going down. Now does not mean that it's done going down, but it's most likely going up. Why? Because if it breaks this level, we will have something I call, or technical analysis calls, a failure swing. It failed to break a new low, okay, and it broke the previous high. So that's a bullish sign, and we would see gold continue going up from here. So the most important level for us now is 5,090 or 5,100. If we close above that, gold is bullish. But if not, if we don't close above it, we might still see more downside on gold. And we might, because like, look here at the 1 hour, on the 1 hour time frame, we see like price struggling around the 200-day moving average, which is around the 5,030. This price is important for gold. That's why we see it struggle here. If it breaks, if it clears it and like continues going up and breaks the 5090, to be specific, not like 5100, we will see more upside. But so far, it's still going like it's still like somehow negative. Okay, it feels positive, but not just yet. I wouldn't buy here because like it could just simply do that. Look, like does something like this, then whoop. So no, I don't want to play this game. I will not buy from here. Let me see this level clear first. I'll buy and then continue go up with it. If not, if we saw a strong rejection here and we start trending lower and lower, I'll continue going down with gold to the next trend line, which is around 3,800. Okay, makes sense. Um, Based on what you said about a possible reversal of the dollar, does the macroeconomics also support that, considering that gold will likely continue going up? Yeah, it does. It does support that, but like it's still early to judge. Why? Because Kevin Walsh could be very hawkish, and he is known for his hawkishness. And he would say, I want to increase interest rates instead of cut rates, unlike what Trump wants. So this would mean strength for the dollar, and yeah, uh, it might reverse to the upside. But anything could happen. Maybe this guy is known for his hawkishness, but maybe he made a deal with Trump, like of course something that is not legal or ethical. That yeah, I will cut rates, and we will see dollar continue go down. So it depends on the next action by the Fed. But does the macroeconomic support that? It does, but it could also support the other scenario. So like it's still too early to decide. We will need to see Kevin Walsh in action, and then and only then we can like make some predictions of what's the next move. But let's wait and see. Let's wait and see. Okay, after missing the trade, how do you control your emotions? Nothing. I just move to the next one. I know, like it's easier said than done, but if you train yourself to do so, it will become easy for you to like. It will become easier for you to, because like you know what happens in your brain when like you miss a trade. You think that like this was a great trade and I missed money and like I missed the ultimate trade, but in reality that's not the case. um, Even though this was like a great trade that you missed, I promise you with my life, you will get a better one in the future. Just keep working and doing what you need to do, which is look for the best trades possible. um, like I used to dwell on like missed opportunities in the past, but that did not do me any good. Like it caused me to enter the market impulsively. It caused me to FOMO trade. It caused me to do all the what not to do, like the all the don'ts in trading. It caused me to do them. So yeah, like be smarter than like the market, so to speak, and do not let it get into your head. You missed a trade, so yeah, why like why dwell on it? Just look for another one. You will get another one, I promise. Like I missed a trade back in 2022, maybe. It was a gold buy around 1,670 something, and it went up all the way to 1,900 after that. I thought like I lost like the biggest trade of my life. Um, just like I don't know, a couple months after, I was able to buy gold at like the early 1800s, which is 1,800 something, and like it went up to like it never saw any lower prices than that, and now we're at 5,000. So of course I did not hold it to 5,000, but what I'm telling you is like I thought that that was the like biggest trade, but no, you always get better and better trades. So you just need to reason yourself into believing that a missed opportunity is not the end of the world. Okay. Okay, in my opinion, every frame has its own retracement. With all respect, I know you listen to news, but I've noticed that with positive news at the top, dump will happen and vice versa for the bottom. Uh, yeah, I would like to hear more about this. What do you mean? This is why I don't like news. They use news for liquidity. Okay, but who are they? You say they use news for liquidity. Like if it's like institutions, then trade like institutions. If they're like governments, trade like governments. Just like be on the right side. That's it. I was talking about the gold. Every time frame has an onerous swing. Well, I know you listen to news, but I've noticed that positive news at the top. Yeah. Now I get what you mean. Like when it's near the top, the news will like be saying that gold is continuing its uptrend. It's going to 6,000 to 7,000 and so on. Yeah, but when it's retracing, they would say no, gold is dropping to 4,000. It's dropping to 3,000 now. I get you. Yeah, they do that, but that's what news is about. You need to. I don't listen to news. Like I analyze news. So that's the difference. I don't listen to them. Okay, they are saying gold is going to 6,000. Like I tell them that it's going to 6,000. I don't need to listen to anyone. You get me? I was talking about gold. Okay, just one trade today, my friend. What do you mean one trade today? You're talking to me? It's my head sometimes. Okay. When missing a trade happens a lot of time after going through loops, now I start looking towards sky and skip loop. This is what I do now with my psychology. Great. You are most welcome, Warzone. News trading feels like gambling. Only if you don't know what it means. But I don't trade news, but I use news to my leverage. If I understand what's going to happen, I can like use that as an extra layer of confirmation. Of course, I do not enter the market based on news. I enter the market based on technical setups. Like who know me know that this is what I do. Okay, so what else do we have? Now, something interesting, like this low, was on February 2nd, right? Look at silver. This is the low that happened on February 2nd, and this is the low that happened on Friday, February 6th. So usually silver is one wave faster than gold. So this might be silver telling us that gold is still going down, and we will see lower than this February 2nd low. Okay, that's how you connect markets. Because I know they don't move exactly the same, but they move like 80% the same. Actually, I love trading post news because pre news the markets dry up, and post news the market moves good. Okay. Yep. I like trading after. If I'm day trading, yeah, I like to trade after the news, not before or not during. Bitcoin analysis. Yes, let's end with Bitcoin today. Now, Bitcoin went up pretty good. 1 second, let me drag this here. That's an old level, but it got respected. So, okay, so this trend line is gone. We don't need this trend line. Bye bye. Now we have this trend line that got respected. We might still see 57, 56, but we got rejected to the upside from a very important level, which was the 60,000. 60,000 is very close to the halving price. It's like a little bit less than the halving price. And on Friday, we saw it jump around 10 to 11%. This jump was 10 to 11%. And from what I see, it's still not very bullish or clear that it will reverse from here. But I would wait and see. To be honest, I would place my entries here just because like it's worth it. With my stops here and target around 140, for example. Yeah, that would be a swing. Like this could be a 1 to 14 trade. And I would hold this for the next, I don't know, year and a half, till we reach a new all-time high of 140,000. Let me make sure that my numbers are correct. Yeah, 145. I'll be good with 140. 145 is the first target based on Fibonacci. I'll go out at 140 and I'll be very happy. So yeah, I recover my funded account to break even, and I don't plan to trade anymore today. I bought gold at just a few minutes ago. Great. Then no need to trade more. If you recover your funded account, just like take the rest of the day off to relax and place your mind where it needs to be. So like you can trade better tomorrow and for the rest of the week. So your mental capacity is very important. You need to pay attention to that. You need to take care of your mental capacity and like mental health in general. So if you feel like doing this, please go ahead and stop trading for the day. Yeah, whatever makes you trade better tomorrow and after tomorrow and for the rest of the week. All right, guys. So that's it for today. I hope you had a great session. I hope you understood, like I answered your questions, you learned something, even if one thing today, I would be very happy. I hope it was fun. And good luck trading for the rest of the week. Stay tuned with us for the next live streams. I have a live stream on Thursday, live trading, so make sure you tune in. So, all right, guys, that's it for today. Take care of yourselves and always don't forget, trade in. Bye bye.